Hi, Lindsay Labonte here, branch manager at Applied Mortgage. Thanks for tuning in to the Applied Mortgage Community Show. On this episode, we have Lou Davis with us from Davis Financial Group. Lou is not only an amazing financial planner in the area, but he's also incredibly involved in the local community. And I feel like it's just such a privilege to have him here with us today. Lou's going to be teaching us a little bit about financial planning, just some basics to give everybody an introduction. So Lou, tell us a little bit about yourself and the Davis Financial Group.
Oh, thanks, Lindsay. So I'm actually a native of the area. I grew up in Amherst and went away to college and then was in New York for many years. I had a entertainment management business and then went to cooking school, and then I had an internet startup for a while, and then came back here and ran sales and marketing at Market Street Research, and I was in that business for a while. And then about a little over 10 years ago, my dad, who had started Allen Davis in the Davis Financial Group, asked me to join him, and I did, and it's been a wonderful ride. I just wish that I had started doing this work earlier. So that's me. I live in Northampton, and I have two teenage sons. One's at the high school, and one's away at Ithaca College for his freshman year.
Awesome. I forgot that you had so many hats before you got into financial planning too. So that's great. And
it's never too late to do something new.
Yeah, keep all those hobbies going at the very least on the on the side. So yeah, could you just start for those who maybe don't know or are confused by the terms? I mean, what does a financial planner do? What is financial planning?
Well, it's a really good question, because financial planning has become a marketing term that's used by insurance salespeople and asset managers and people who sell mutual funds and stockbrokers. And those are all components of financial planning. They're all elemental to constructing a financial plan. But how we understand financial planning is the effort to help people understand how all the different pieces of their financial lives are interconnected and interdependent. And typically that's done by building a very granular model of one's financial lives and helping them understand how all these different silos that we all have, our retirement savings, our investment often in our homes and any other kinds of savings, our college savings, and what's in our checkbook, and how all of our expenses, how every dollar we spend, all affects the other pieces of our financial lives. And that by creating context that helps you understand how all these pieces work together, you can understand the power that you have in making decisions about every dollar that you make and spend and save. And so that's really our mission.
That's so great. And, working in the mortgage space, it's a lot of times it's somebody's kind of introduction to really even thinking about their whole financial picture is when maybe they buy their first house or their second house or they're refinancing. So from your perspective, I mean, when is the right time to really involve a financial planner?
Well, I believe this work is valuable to people throughout their lives, as young people entering the workforce, and people who are approaching retirement, and people who are in retirement and thinking about legacy. There's no wrong time to begin financial planning. And financial planning means different things to people as their lives evolve. The right time is yesterday to do financial planning, and it means different things, right? So some people, it's about budgeting and about understanding, you've got a determined amount of money that's coming in as income or whatever, and you want to live your life and you want to spend that money to get joy today, to be able to save for tomorrow. What's the best way to do that? What's the best way to understand the power of those dollars and to use them most impactfully for you? So there's really no time that's the wrong time. Oftentimes it comes too late,
Right.
and that, the most valuable asset that we have in our financial lives is time. And that time can be leveraged in different ways at different times in your life. And so our job as planners is to help you understand that power that you have and help you make good decisions along the way.
Yeah, that makes perfect sense. A lot of people don't think about their overall financial picture or needs or anything until maybe it's an event that feels really heavy in a way, or too
Yeah.
late or something, or retirement's approaching, and doing it sooner definitely maps out the rest of your sound financial life and well-being.
Yeah,
Um,
people come to us oftentimes in transition points in their life.
mhm.
So when they're getting their first job, or they've just, gotten married, or just gotten divorced, or um, have kids that are about to go off to college, or that are, or they just have kids and they're thinking about preparing for their kids' future. And then there's a lot of times that people come to us after they've inherited money, after their parents or relatives have passed, and all of a sudden they've got funds that they don't know what to do with, and they need help in trying to figure out what the most effective way to position those assets are.
That makes sense. So I think sometimes the hesitation is like, what does that first contact look like? Now I know it's going to be different for everybody, probably depending on their scenario. But what would somebody want to have prepared when they first pick up the phone to speak with you?
I think the most important thing to have prepared is an understanding of your goals for yourself, more than the specifics of your financial life. What I want to understand in meeting somebody for the first time is who those people are, what's important to them, what do they value, and what are their goals for the future. Is their main concern about preparing for retirement? What does retirement mean to you? Because it means very different things today than it did yesterday, and it means different things for everybody. So I really try to understand who people are and what's important to them and what their goals are for the future. And then build a model around their lives to understand first, if you keep on doing what you're doing today, what does the next 40, 50, 60 years look like? And what can we do today to make things better for the future and to realize your goals and also realize your intentions?
That's a great way to look at it. So, of course, there are a lot of different kind of basics of a financial plan or a solid financial plan. And these probably each warrant their own 15-minute conversations. But could you just maybe provide a little snapshot of what are some of the types of um, items that you'll look at with people as far as different types of retirement accounts, brokerage accounts,
Yeah,
insurance,
sure.
disability, any of that?
Yeah, well, we want to, build this comprehensive model of folks' lives. So what we look for is an understanding of what their incomes are, what their expenses are, what the current status of their savings are and investments, what kind of insurance policies they may or may not have, and what are some of the uh, the key elements for them in thinking about their future in terms of what keeps them up at night. I mean, that's what we want to solve. The overarching goal of having a financial plan in place is to make sure that you feel good about your financial lives, that you feel like you're making informed and intentional decisions, so that you can sleep at night. So, and that means different things again to different people. So, some people want to pay off their mortgages, right? Even though they're paying 2.9% on them, when empirically that may not make sense. But if they go to sleep at night and they worry about having a couple $100,000 that they owe, and that keeps them up, then let's focus on paying that down, but mitigating the negative effects of that in terms of the opportunities you're losing for arbitrage or whatever. So basically, we look for basic documents about their financial status, and then kind of mapping that to their hopes and dreams for the future.
That makes sense. And that's a great segue on my next question, which was kind of more mortgage related. So it's been a really funky time in the mortgage industry with rates during the pandemic, or I should say during 2020 and 2021, really being at historic lows. Many people were able to take advantage of that. And it kind of flips the typical thought that people want to pay their mortgage off really quickly, right? But if you were able to get a rate that maybe had a 2 in front of it, does that actually make sense? So I guess what I'm asking is, what are some of those conversations you're having with folks now around their mortgage actually intertwining into their financial plan?
Yeah. Well, the equity in your home is an asset, and there are lots of different ways to utilize and to leverage that asset. And and it's a matter of understanding what is the cost of using one asset versus another to achieve some kind of goal. So if you want to remodel something in your house, does it make more sense to use money that you've saved in a, let's say, a non-retirement, non-qualified investment account, or does it make sense to turn to the bank to take a home equity line of credit or a home equity loan, where your rates are in the 2s or 3s or even 4s? When you compare that to your investment portfolio that's maybe making 5 or 6, or in the last year's 10, 12%, what empirically makes more sense? Um, uh, the low rates that are available through a home equity line or a refinancing makes it so advantageous to turn to that money, so that you don't have to take your other savings out of the market where they could be earning much more than you're paying for the loan. So we look at all that and make those calculations, and it's a very easy thing to be able to compare. If you did this, if you used your investment dollars, here's what things look like going forward. If you use a home equity loan or a refi, here's what things look like into the future. So empirically, it often makes sense to take the loan. But again, we have to hold that up and work at that intersection of the emotional and the financial in helping people make those decisions, because it's not just empirically based.
Right. And I appreciate that. It's always somebody's goals and emotions, and especially when it comes to their finances, just like with their mortgage fitting into the whole puzzle, what's going to make the person feel most comfortable. And I'm just laughing to myself as you're saying what keeps you up at night with my current pregnancy, insomnia, and everything. And I'm pretty sure I've sent you an email or two at 3 in the morning saying, "Do you think we should do this? Do you think we should do that?" So I can definitely vouch that Lou's there to help with all types of goals and questions. So if somebody wanted to get in contact with you, what's the best way to do so? Where's your office located? What's your contact information?
Sure, we have an office in Hadley on Bay Road. That's at 10 Bay Road. You won't find anybody there. We're all working remotely right now. So the best way to get in touch is to go to our website, davisfinancialgrp.com, and you can find all of our contact information there, or you can use the contact us tool and send in a note. And we could set up a time to get together on Zoom, and I want to hear about you and all the things we talked about in terms of your situation and your goals. And I would tell you about myself and the way that we work, which is a very different model than many, in terms of how people pay for our services. And there's all different kinds of financial planners and their fee arrangements. Some folks are fee only, in that they have a requirement that you come and bring them your investments, and that they'll charge you a fee for those investments. And oftentimes people have, advisors have minimums of $500,000 or $1 million in order to work with them. Some people sell mutual funds and they make money off of their commissions. We don't work like that. We are a fee for service practice, so that we charge an annual retainer fee for folks. And what that does is put us in the role of a fiduciary for our clients, where our only interest is their best interest. And that is our North Star in how we work. And we absolutely do manage clients' investments and charge a fee for that. But there's no requirements that anybody buys anything from us or invests with us. Your investments, a lot of our clients have most of their investments in their qualified retirement plans. So we're not managing those. But this model allows us to work with everybody, no matter where they are in their financial lives and no matter how many zeros are next to their net worth.
Perfect. And you can look at the whole picture. That's amazing. Well, thank you so much for your time today, Lou. I really appreciate it. Appreciate the insight. And I'm sure we'll have you back on again in the future.
Awesome. Thank you for this opportunity. It was really nice to be here.
Thank you. I'll see you later.
All right. Take care.
That's a wrap. Thanks so much for tuning in to our Applied Mortgage Community Show. As always, if you have any mortgage-related questions, please contact our team at Applied Mortgage, 413-586-5626, or appliedmortgageteam.com. And if you want to be featured on one of our episodes, let me know. We'd love to have you.